GM. So, BTC, this is a little bit of a preview towards the volume profile lesson that's coming. But trade of the day for Monday, 17th of June is going to be wrapped up in the same kind of logic. So, one of the things that I like to do is mark off a weekend range. So Friday, Bitcoin obviously dumped down, and then it rallied back into the close, and I'm taking this from the close of the New York session, which isn't midnight. It was this last spike here. That was Bitcoin going into the end of the trading week and the extended 1 hour of trading for futures. So the CME futures closing, the ETFs trading, all of that finishing. So that's where the week ended. And then Bitcoin traded over the weekend, Friday night, Saturday, Sunday, right up until Sunday's close over here, and Monday's open. So you have this tight range with the volume profile drawn, with the value area. Price could not break beyond that to the downside or the upside, and we're back inside it, and we're back to the value area low. So the way I see it is, until there is a sufficient catalyst, this price will never break from this area. Now, of course, in reality, eventually price does break. But you should view it as, if Bitcoin is trading between 66 and 66,500 and has done so for the past 3 days, that's value. That's how much Bitcoin is worth right now. Right? That's how much BTC is worth. It's how much people are willing to pay for it, buy and sell. Something has to come along to shift the perception of BTC to make it appear more expensive, less expensive, more valuable, less valuable, to significantly move the price. If something doesn't, and that, by the way, that something is big buyers or sellers. It has to be big players. So what that means is somebody will come along with billions of dollars to buy or sell. And we'll say somebody, it's usually, in reality, multiple people, of course. And that will send Bitcoin's supply-demand balance into a different direction. Until then, it's really a day trader's market, right? So understand that when the price is not moving like this, you are trading short-term against short-term players. And I think this is what gets misunderstood a lot, especially by people who try to day trade. But really for anyone, this isn't like a day trade setup. This is from Friday until now. So you're looking at multiple days, even if you might trade it intraday. The principle, the logic remains the same. If you're always betting on the big move, right, you're getting short here and you're betting on it to go all the way there, when you actually know that the most likely thing is that it doesn't go there, it goes here and here and here and here and here and just keeps doing that until something breaks it. If you're always betting on the big move, you're just going to round trip, right? Because you're going to get short on the breakdown and it's going to come back and it's going to stop you out. Just like you're getting long here and it comes back and stops you out. Instead of, the way you should adapt and approach these is, first of all, don't trade in these really tiny ranges. But if you are going to trade in them, you're trading the short move. You're trading from the low towards the high. And that's it. You're trading the rotation. You're expecting it to fail and not break out. You're expecting it to fail and not break down. If it does, what you want to see is something like volume confidence. So if Bitcoin does break down here and you see a lot of volume, that tells you what? Big players might be stepping in. If it breaks from this green zone with volume, you can say probably it will not reclaim. Now you don't pile into a short down here. You say, well, if that break is valid with volume, it will probably not reclaim that area. And that is where you can actually get your best trade, somewhere along here on the retest, the failure. Because then you're taking the logic of, if this 3 or 4 day range is broken, we're probably going to head down towards our next known area of liquidity where people will want to transact, which is at the lows. Same on the upside. If Bitcoin is able to make it through this, right? So if it holds these lows, I would expect it to go to here, no further. That would be the trade. If it then breaks out from that, I'd expect it to move towards the monthly open. That's the next big resistance above. And understand that to get to 65 or to get to 67.5, big players have to come in and buy or sell. Because otherwise, Bitcoin is just happy to trade between 66 and 66.5, as it has done for the past few days. That's why weekends tend to move like this, like we saw, with not much movement. Because the least number of big players are trading on the weekend. There's no ETFs open. There's no futures trading in CME. Wow. That was fucking loud. There's no futures trading on CME. There's no Wall Street players. It doesn't mean you can't have moves on the weekend, but it's far less likely because the big players are not present. Then you come back in on the following week, and that's quite often why you do see moves on a Monday or a Tuesday. We've had 3 days of Bitcoin going sideways. Now, as you can see, even as I record this, here we go. Bigger players are stepping in, more volumes coming in, price is starting to move, and you can see right away, probably already, seeing some volume pick up here. So since the start of the day, from the really low volume over the weekend, we're starting to see it pick up. It's now above average on most of these candles. And that will just continue throughout the day as we get towards the New York Open. It will increase again. And as we get towards the second, third, fourth day of the week, you see more and more and more activity picking up. So, for me, until I see a clean break, which would be like a high volume breakdown towards 65.6, and then a retest, I wouldn't have much interest in trading this part. The next place of interest for me would be if it hits the lows, and if it's able to climb up above 66.5. And also, a good one to mark here is the weekly open, which is right over here. That's this week's weekly open. Because that's obviously the dividing line between a green and a red week for Bitcoin. And so the best trade to the upside would be breakout of 66.6 towards 67.5. Best trade on the downside would be a solid breakdown retest that fails. And also be aware that both sides of this can continue to fail and it can continue to chop, meaning it comes down here, comes back for retest, it actually does climb back inside and just is choppy. And so your time frame, right? You should be low time frame. If you're trading this, you're obviously day trading it. You're obviously low time frame trading it. And your approach should be quick rotations, take profit fast. Like if this move now that we've just seen, if I go into a lower time frame again, if this move fails and is unable to break cleanly below that, it's very, very, very easy for price to just make its way up to 66.5, just back to the other side. If people are shorting and shorting and shorting and it can't break, then it's just going to react over there and probably all the way back. It's just, again, more aimless drift. Can't go down to the lows, goes to the highs. Can't break out from the highs, goes to the lows. If it can't break from the lows, back towards the middle or to the high of that. And make no mistake, this kind of price action, this is why it looks so bad. It's so choppy, it's so difficult to trade, because there isn't actually anybody properly trading this. It's mostly just drifting sideways, gets to the extremes, not enough real actual demand to push it out, so it falls back inside, not enough real actual supply to push it lower, so it falls back inside, and it's just drift until a big player comes in and shifts the market. So that's a couple of trade ideas for Bitcoin, but more of a mini lesson about how to think about it whenever it's in these really tight, compressed phases. Better to wait for signs of big players to re-enter and then follow them. That's the other thing. Like, a lot of times when you're trading these, you can see suddenly a big move like this happens, right? And then price is down here, and then it goes sideways, it doesn't bounce. You're like, oh, I missed the chance of that move. But did you miss the chance? You actually just got confirmation from the market of where it's going, right? If you're able to identify that and say that was a high volume, the flows, open interest, whatever your confluence tools are with the big price move, the market's now just giving you the direction so you can follow it, right? A lot of times what people are doing is they're getting long here and short here and long here, and they're trading the choppy range until it stops ranging. If you're going to do that, you're going to be right a few times, and eventually when it breaks, you're going to be wrong in a big way. But if you manage your risk, you just lose 1 hour. But then by being wrong, okay, getting long here because you think it's still value area support, you get long here and then it breaks down. But guess what? Now you've got the clearest indication of where price is probably going to go next, which is lower. Doesn't mean it always will, but when you see those big players step back in, you see the market start to move, that's giving you the opportunity to spot the next trend, where it's going to trend through to an area where it can accept. It's all about acceptance and rejection when you're looking at these lower time frames. So, for example, Bitcoin does not want to go to 65k. It rejected, pushed down, stayed for 2 or 3 hours, boom, straight back up. Does not want to go there. So the expectation if Bitcoin goes back there would be it should do the same. It should reject up or down. And that's where people sometimes mistake it as well. It just means price doesn't want to stay there. Price does want to stay at 66. It doesn't want to stay at 65 from what we know. So it could come down and bounce back up. That's where you see a double bottom, very typical. Or go right down through it and find another area where it does want to spend time. Price is always looking to move to the area where it will consolidate. If you look at this chart, it spends most of its time going sideways, right? And then it moves up, and if it's able to hold, it'll stay there and go sideways. And it moves up, and it's able to hold, and it'll stay there. And when it starts to fall back, guess what? It comes all the way right back to where it previously wanted to be. There it wants to be again, and then back down. And that's the way the market moves. But as you can see this develop over time, which is why Bitcoin's low time frame bearish, the areas where it's accepting are getting lower and lower and lower. So Bitcoin's price is trending lower. It's accepting at lower and lower levels. And from that, your assumption is Bitcoin's more likely to break through 65 than to hold at it, because it doesn't have much history of actually staying at 65. Right? We reclaimed 65 back in May, and immediately pushed away from it, and then all the price appreciation was up here and the consolidation was there. Coming back to 65, I don't see it holding. Either it's going to bounce again really strong off 65 and we stay up above 66 or 7, or we're going to break straight through it and probably head back to this zone where price definitely did want to consolidate, between 60 and 63, somewhere in that area where it was stuck for a week or more. Probably head back to there. So that's like the framework of how to think about acceptance, rejection. And there'll be a lesson on that later this week. GM.